Welcome back, folks. We are joined by a special guest right here in studio. We've got Rick Wargo with OnPoint and Raymond James here to discuss what has been a big news headline, and yet I think a lot of people don't necessarily know what it means. The rate cut from the Fed earlier this week, what does that actually mean to the average person out there?
Yeah, so it is a huge headline, and in the end, one word: gradual, right? And most people are wondering, well, what does it mean to me? And over time, it will have an effect, but it really depends on which side of the coin you're on, whether you're a spender or whether you're a borrower.
So with that in mind then, good news or bad news if you're a spender or if you're a borrower?
Yeah. So it's sort of like the weather, right? And there is no such thing as bad weather, just bad clothing, right? So having a plan and going back to your plan would determine whether that's a good thing or a bad thing. So borrowers, for instance, will have an opportunity to possibly look at some refi. Now, the Fed's going to meet 2 more times by the end of the year. The word is that maybe they're going to have some additional cuts. We'll see. Again, Sure. It's like predicting the weather. Who knows? So if that's the case, well, then look at your refi opportunities. If you're a saver and you've got cash, and who doesn't like cash? You know, this guy for sure. But you're probably not going to see the same robust rates that we've seen over the last year or more.
So would that be a situation where you'd want to lock in rates now with the assumption that things might be dropping?
Yeah, I would. I honestly, I would wait and see.
Sure.
Wait till the end of the year, see what the Fed's going to do. There's nothing that needs to happen immediately. Like there's the fear of missing out, the FOMO. Like,
Yeah.
oh, I need to do something right now. I would refer back to your financial professional, and get their advice as to what your plan is, because everybody's individual plan is, well, individual.
Yeah, and like you said, gradual. So it is more of a wait and see, more likely, for most folks.
Yeah, it's going to take a little bit for the market to digest what this cut means. So credit card debt, auto loans, home loans, I would expect those to come down over time. And exactly how much is going to depend on the lenders that you're working with.
Okay. So if somebody's out there and still looks at it and says, my financial plan, I don't have a financial plan.
Yeah.
What do I do? So what sort of services does OnPoint and Raymond James offer in that regard?
Gosh, there are some really great services. So all of these can be found on the website, OnPointCU, like creditunion.com. When you click on the personal, there's 2 resources that I'd point you to. One is called Enrich, which is kind of a first principles guide to financial fitness. If anything you did, but you just followed that guide, you'd find yourself financially fit. On the Green Path side, it's more of a co-created active coaching service that if you found yourself maybe unwittingly at the deep end of the pool and need some little support getting out of that debt management, there's that. And then finally, you have our services through our OnPoint Investment Services, and you can click on the investment line and we'd be happy to guide you through that process.
Awesome. So I would say, even though a lot of these headlines, it's been the talk about a half-point cut being so massive, maybe take a deep breath.
Yeah, it is big news. Don't get me wrong. It's big news. We're heading in the direction. Overall, everyone seems to feel very positive about it. The market reacted, very well yesterday. If you happen to watch that, so we'll wait and see. But yeah, I think overall it's a great thing.
All right. Thank you so much, Rick.
Right.
Appreciate you coming in.